Welcome to everybody. We're going to start out here with a presentation and step you through the components of the various programs that are out there to support businesses, small businesses in the U.S. And then we've got a little matrix at the end that will allow you to basically compare what the different programs features are and help you understand where you want to be focusing your energies right now as far as a small business and looking for some assistance that's out there. And then we're going to open it up for some questions at the end. So again, thank you for joining us here today. We're going to go through the Small Business Administration Emergency Loan Overview. There is a lot of questions. You may have some questions as we go along here, but we've received a number of questions, and there's some confusion about the different programs, which entity is responsible for them, and we're hoping to be able to clarify that here for you today. Just a little bit of a commercial, if I can, for the SBDC. There are 17 offices spread around the state. You'll see them by the red stars there. So if you're anywhere in the state of Georgia, you should be within a reasonable drive of a small business development center. We're funded jointly by SBA and the University System of Georgia, and we're here to help you out. And when we work with small businesses on our one-to-one consulting work, there are no fees to the small business for those services. So if you need help, not only in this crisis that we're in right now, but as we emerge from it and we grow and we expand our economy and you expand your businesses, look at one of the offices in your area and consider reaching out to us. We're here to help you. We also want to thank our partners today from the Community Affairs and Economic Development Organization inside of Georgia. And we hope that you find this webinar informational and helpful. So there are basically three different components inside of the small business loan program. First of all, there's a program called the SBA Guaranteed Loan Payment Relief. We'll go into that a little bit further, a little bit more in a subsequent slide. There's something called the Economic Injury Disaster Loan, or EIDL program. And there's a subcomponent of that, which is an advance. That was the EIDL Advance was something that was added when the CARES Act passed on March 27th. It's got a nice little feature to it. We'll talk about that in a few minutes. And then there's lastly, and this is the thing that seems to be getting most of the business press right now, is this Paycheck Protection Plan, or the PPP we'll refer to it. And as we go through the components of that, you'll see what the intent of that loan program is. And it is, that name there is actually quite good. It is to try to protect the paychecks and the employees that are parts of small businesses today. So let's start out with the Guaranteed Loan Relief Program. If you have an SBA, if you currently have an SBA guaranteed loan, and let me be clear about one thing, SBA, generally speaking, does not loan money. What they do is they guarantee loans that you would get from a bank, from a lending institution. And under that guarantee program, they will guarantee a portion of that loan back to the bank. So it takes some of the risk away from them so they can help small businesses out who may not be able to get commercial lending vehicles made available to them. So if you're operating on one of those SBA guaranteed loans and you're an existing borrower not on a deferment plan, in other words, you're up to speed, you've been paying the loan back, the SBA will pay 6 months of interest, principal, and fees on that loan. Now, if you have a loan from the SBA and you are on deferment, maybe you had a hardship, death in the family, something that you needed to go on for deferment. When you come off of that deferment plan and you start to make your payments, the first 6 months of the first 6 payments that you have after deferment will be made on your behalf by the SBA. Very much like that first bullet point, the difference here is your payments will pick up after your deferment ends and your responsibility to repay vests back into you, back to you. And then lastly, and I think frankly, and again, this is something that came out of the recent CARES Act, this program. I find this as exciting as anything, because if you're a new borrower, and we deal a lot with new businesses looking for SBA loans, and if you get an SBA loan within the next 6 months, within the 6 months of the passage of that act, which was, again, March 27th, so you go forward to September 27th, 9/27. If you get a loan, an SBA loan, independent of the loan programs we're going to talk about here, a traditional 7A or 504 loan, the first 6 payments of that loan will also be made by the SBA. That'll be interest, principal, and any kinds of fees. And here's one other exciting component of this program is those fees, those fees that are paid on your behalf are not going to come back to you as taxable income. SBA is just going to stand in your place for 6 months, make those payments, and then back away and let you take that loan over going forward. Great opportunity here for small businesses to preserve some cash flow in the next 6 months. Then secondly is this economic injury disaster loan. Now these loans are actually fairly common. SBA steps in and actually loans money. This is where the roles change, where SBA is actually going to fund these loans, actually going to put the money in your bank account. And these are the things that you would hear, if you hear on the news, Tennessee, Nashville with the tornado several weeks ago was declared a natural disaster or declared a disaster area. And you say, well, what does that mean? Well, what that means is then SBA can start to take applications for loans for businesses who've been injured and need that emergency relief. And that is the program that the EIDL operates under. The difference in this is it is unprecedented how broad this is. Every county in every state in the United States, businesses in every county in every state in the United States can apply for these injury disaster loans. There has never been a disaster of this breadth in the history of our nation. Eligibility is businesses with 500 employees or fewer. Now, this also has been broadened to include sole proprietorships, independent contractors, co-ops, and other small businesses, including tribal small businesses that are less than 500 employees. You can get up to $2 million under the EIDL program, the $2 million loan. It basically is considered to be a kind of a bridge loan to get you through the next month or so to cover your operating expenses that you would have been able to do on your own if this disaster hadn't occurred. So again, think of this as working capital. The loans, and this is a feature of the CARES Act, it actually is going to simplify the process of getting these loans, that now it can be made solely on credit scores. If some of you had gone out and applied for an EIDL loan in the early stages of this program, you would have had to upload a number of forms. This has been streamlined significantly, and that was effective last Monday, and that was the Monday following the passage of the CARES Act. So again, things in these programs are moving quickly, and there's some changes that are going to be made as we go along. And this ability now to more quickly process these loans, I think is going to be a benefit for all small businesses. This loan will carry an interest rate of 3.75% for small businesses. And the first 12 months of the payment will be deferred. Now that's different than what we talked about on that payment program in that earlier slide. These are deferrals. So you will end up still making these payments. It's just basically going to take the start of your loan and slide it out 12 months. During that 12 months, that interest will accrue. So that 3.75% interest rate will accrue over those 12 months, but you won't have to make payments on these loans until the 12 months has passed. The nice thing about this, again, it's saving your cash. It's allowing you to put your cash in towards rebuilding your business, hiring back, and paying employees. The other nice thing about the EIDL loans is the term of these loans is they can be up to 30 years. Now, when you hear back from a loan officer after you've submitted your application on an SBA website, when that loan agent comes back and talks to you, you'll get an idea then of what the term is that they're offering you. These loans we expect to be coming out here shortly. I know some people may have already applied for them. But we do think that the streamlining process has been in place for a little over a week is going to allow SBA to more quickly process these loans and then get these funds out in the hands of small businesses. One other feature, this is a subcomponent of the economic injury or the EIDL program, is for those that apply for that loan, one of the last things you're going to be asked when you go on the site is you are about to finish up your application. I think at the bottom of the screen, it's going to say, would you like to be eligible for a $10,000 advance on a loan? And let me give you the answer to that question. The answer is yes, unequivocally yes. Take the money if you can get it. And I'll tell you why that is so. This advance does not need to be repaid. So let's say that you don't end up getting an EIDL. They go back and determine, for whatever reason, credit score, need, whatever it is, they basically say, we're not going to offer you an EIDL, but they had provided you an advance. And again, be clear, that advance is not necessarily $10,000, but it's up to $10,000. But if that advance had been advanced to you, that is immediately forgiven. It is a grant. It acts just like a grant. So take that option when you're filing for an EIDL, because you want to be able to get that cash in your checking account quickly, your business checking account quickly, and be able to use those funds. And it is not something that you will have to repay, even if you don't get a loan. So very, very, very nice feature. So let me step in here a little bit. I should have probably said this early on. We're the SBDC. We're funded partially by the SBA. We are not a lender. We work as a resource partner with SBA. And so if you contact us for some help, we can help you get directed in the right place. But we just wanted to be clear, funds will not be coming from SBDC. Don't show up at one of our offices looking for a check or trying to drop forms off. We can tell you where you need to go. Again, these funds that you get under economic development and under the advance can be used again to pay those expenses that you would have normally been able to pay had this not hit you. So this could be any of these components that you see in this bullet point. The eligibility is the same eligibility we talked about earlier on the EIDL side, is available to any small business, sole proprietors, independent contractors. You can all apply for these. We have gotten a lot of questions from businesses about, can I apply for this? The answer is yes. Should I apply for this? The answer is yes. And then sometimes we'll get somebody, well, I've got extenuating circumstances. I've had this problem. I've had this problem. I've had this problem. And all I can tell you is the SBA's mantra is apply, apply, apply. They're going to do their best to work through that process with you. And they're basically saying, apply, will determine whether you're eligible or not. Don't disqualify yourself and think yourself out of this. Apply for the loan. If the eligibility doesn't accrue to you, you'll know about it. But apply, apply, apply. Then lastly, we're going to take a little more time on this area. We're going to talk about the Payment Protection Plan, or the PPP. This is the big dollar amount that came out of the CARES Act. This is a loan from a bank. So again, when we started out on the presentation earlier, we talked about these SBA guaranteed loans that were being forgiven, or the 6 months there was going to be a stand-in and they paid those 6 months of payments for you. These loans are under that same program. The technical term is it's an SBA 7A loan. That's a distinction that is important to the banking community. But it is a special loan under that program. It is a SBA guaranteed loan. SBA will not be sending you this money. You will not apply to the SBA for this loan. You'll apply to a bank. Most banks today are accepting applications from their current customers. I would encourage you, whatever banking relationship you have on the business side, reach out to that banker and see where they are with the PPP process. The statute, or the act, basically said that the interest rate could not exceed 4%. Well, the Treasury Department and the SBA have determined that that rate is set now at 1%. So it is not going to be a 4% loan, it's going to be a 1% loan. The other thing it said is that that loan could be up to 10 years. They've also set the term on that loan. It's going to be a 2-year loan. So it's a 2-year repayment on that loan. We'll talk about some of the features and deferments that are available under this thing as well. So I just want to restate that. So 1% loan for 2 years. People get confused over what the statute said about what the limits were on the interest rate and what the limits were on the term. The actual loan details that have now been established under this plan are much below those numbers, much below the 4%, much below the 10-year term. So eligibility, you must be a small business as defined by the SBA. If you don't, I mean, generally that's going to be 500 employees. You can go in and look at your NAICS or NAICS code, and in there, on the SBA side, and they will tell you whether you qualify as a small business. The small business definitions have not been modified, with one exception in this plan. So if you were if you were a small business before, then you're going to be a small business under this program. One thing they did do an exception in the CARES Act is in recognizing that, like restaurant owner may own 4 or 5 or 6 locations, and they may actually have gone up over this $500 employee list number. What they did is they broadened that and said, as long as you don't have more than 1,500 or 500 at one location, you're eligible as well. So rather than exclude somebody who had a lot of part-time employees, you know, working at a restaurant or something like that, they've broadened it, they've expanded that a little bit to make those types of businesses who are getting some of the brunt of this shutdown, the restaurants and the hospitality space are just getting, are really getting decimated. This program is really tailored to address their needs. Sole proprietors, the self-employed, and independent contractors can also apply. Their application dates will be this Friday, April 10th is when this group of businesses can start applying. They have streamlined the regulatory process for the PPP loans. Again, this is an SBA 7A loan. Generally, if you're going to qualify for a 7A loan, if you've ever gone through that process, and we help businesses all the time in trying to find business loans, they have to go through the gauntlet of being basically turned down by a commercial bank because of the risk factor, and then saying, as a result of that, let me refer you over to an SBA guaranteed lender and see if you can qualify for an SBA guaranteed loan. That is what they call the no credit elsewhere test. You have to prove that you actually need an SBA guaranteed loan. That test is waived under the PPP. So even if in the past you might have been not eligible for SBA 7A loans because you actually had good credit and your business was bankable, if you will, at the commercial level, you can take advantage of this program because that no credit elsewhere test is waived. I'll come back on why some of these bullet points are important. No personal guarantee or collateral is required. This, again, is a huge change. No personal guarantees or collateral will be required by the borrower. No fees. Generally, if you have an SBA loan, if you have any loan, generally, there'll be some sort of closing fees, there'll be origination fee. I mean, there may be multiple types of fees that will be added into that loan. You'll be paying those off as part of your overall loan repayments. Under the PPP, there will be no additional fees applied to these loans by the lender. And size of the loans, up to $10 million under this plan. It's based on your payroll costs. What you will do is you'll go back and look at the previous 12 months of your payroll costs, how much you were paying your employees. You'll calculate that out. You come up with an average monthly payment that you have been making. So if you add that all up, let's say your payroll was $1.2 million, you'll divide that by 12, and your average payroll would have been $100,000 per month. You do have to exclude any compensation in excess of $100,000 a year to any individual. So if you're an individual, let's say you're the owner and you paid yourself $150,000, $50,000 of that will have to be exempted from this calculation. But once you arrive at that average monthly payment, you multiply that by 2.5. They're allowing you to gross that up a little bit to cover some expenses beyond payroll expenses. 2.5, and that will be the loan amount that you can get. Let me back up to these bullet points here. This regulatory streamlining is done because they're trying to move these loans through the process quickly. SBA 7A loans generally will take you 60 to 90 days to process. They're trying to get these done in a handful of days. The only way to do that was eliminate that no credit elsewhere that you had to go and run that gauntlet before qualifying for a PP or for an SBA loan. The personal guarantee and the collateral, no valuation, no check back on what your own personal wealth is, because you don't have to guarantee it. And by taking these fees out of the process, they've streamlined the process significantly. And the intent is speed, speed, speed. Now, the business must certify the loan we use to retain workers, maintain payroll, maintain certain payments that they have, monthly payments, and pay for utilities. That's a requirement that as a business, you must represent that. There'll be a certifications and certs and reps that you're going to have to sign when you apply for this loan that says, yes, I'm going to use these funds for these purposes. This is not a refinancing tool. This is not a loan to go refinance high mortgage payments or credit card payments. This is to maintain your cash flow that has been hit because of the crisis we're in. One of the nice features of this plan, this program, is loans may be forgiven. Again, that is may be forgiven up to an amount equaling the total loan. You actually could get the total loan forgiven. No guarantee that you're going to do that. There's a calculation you must do. What you have to do is you basically take all of the costs you got in these categories, your eligible payroll, mortgage interest, rent, and utility costs that you've got during an 8-week period after the loan is originated. So let me put this in a concrete example. You get a loan, you take the loan down, and let's say it's May 1st when you get the funds. The next 8 weeks, you need to track these costs, payroll, mortgage interest, rent, and utility costs through that 8-week period. You need to keep very, very good track of that. If you've got an accountant or a bookkeeper, give them a heads up. They've got to be able to pull this information together for you and make certain that they're doing it accurately in that 8-week period. Those are the funds that you're going to roll back up, send into the lending institution and say, this is the amount of loan forgiveness that I'm applying for. The other thing is you must apply for it. It isn't going to be done automatically. You're collecting that information. You're collecting those payments that you've got. It's going to be your obligation to provide that back up to your lender. Your lender's going to reach out to you and ask you about it because they're aware of the feature that this is, that this exists in the loan. But it's your responsibility as the borrower to send this information into your lender. It's forgiveness. And just like in life, you can't get forgiveness unless you ask for it. And so ask for forgiveness, pull these numbers together and make certain you do request your loan forgiveness. Again, that same compensation in excess of $1,000 or $100,000 a year applies to that calculation. So if you've got somebody who's highly compensated in that 8 weeks, again, prorating that out for a year, you'll have to reduce that loan forgiveness request by that amount that's in excess of $100,000 a year. So again, in that example earlier, where an owner was $150,000 a year salary, you had to exclude 50, you're going to have to exclude a prorate of that $50,000 from that loan forgiveness request. This was something that was added recently when the SBA gave some guidance to the lenders. Non-payroll class that you include in your loan forgiveness requests cannot make up more than 25% of that. So again, let's say you took down that loan example we had earlier. You could have taken a $250,000 loan down. When you go and apply, you cannot have more than 25% of that $250,000 be non-payroll expenses. So keep track of that as well. They will do it. They will check it. It's basically the intent of this loan, and the intent of this entire program is hire employees back, keep them on payroll, keep them employed, keep your business going with your employees, and maintain your employee base. If you have excessive layoffs and you don't rehire the same number of people, or you have pay reductions in excess, let's say everybody voluntarily takes a pay cut of 30%. You're going to have to reduce your loan repay or your loan forgiveness request by what you reduce in excess of 25%. Let me state that again, because I'm not even certain I understood what I just said. Basically is if you're paying somebody, let me give you an example. You're paying somebody $40,000 a year and you all agree to take less than 30, let's say $28,000 a year. You're going to have to adjust for that amount because you've taken a reduction in their compensation that is in excess of that 25%. So why is this in here? This is in here because they want you to not only hire people back, but they want you to pay them about what they were being paid before the crisis hit. And that's why these triggers are in here, is try to reestablish your payroll back to where it was before this crisis hit. Get employees back in the employment of your business and pay them what they were earning before this hit. This is another nice feature, just like that loan forgiveness payments that were happening in the first slide we did, those 6 months of stand-in payments. If you get a loan forgiveness under this PPP, it is not going to come back to you as taxable income. A lot of times if you get a loan forgiveness, it'll come back and say, okay, here's your forgiveness, but we're going to send you a 1099 dash something or other form that basically says you got to treat this as income. That will not be the case in the PPP. If you get a forgiveness under the PPE program, that loan amount is gone, and basically it just reduces your principal by that amount of the forgiveness. Let me touch on a little bit. During the first 6 months of the PPP program, you have a 6-month deferral. Just like that deferral on the EIDL, except the EIDL was a 12-month deferral, the PPP has a 6-month deferral. So for 6 months, you don't have to make any payments on the PPP. So again, we go back and we look at what is the underlying theme of all of these programs: get people back to work, get them back to the compensation they had before the crisis hit, and protect your cash flow for a period of time to let you get back on your feet. All of these programs have got features and components that are triggered towards those basic fundamentals of reestablishing people as employees and making certain that your cash flow is as minimal as possible during this during the period, and get you to a recovery period, get you to a recovery much quicker. So let's look a little bit here. I've got this. We've got this little matrix here that kind of compares all of the different programs that we just covered here. With the exception of the loan relief program, that's a pretty straightforward standalone. But this is looking at the various loan programs, and this matrix will be made available to you. Well, there's going to be a link at the end of this presentation. It will go up in the chat room. You can copy it down. You can go to our website and you can download this matrix and some other things as well. But let me just, excuse me, let me just step through this real quickly. Key things here is the EIDL and the EIDL Advance are SBA provided funds. The PPP is a bank, a lender. It is a traditional SBA 7A lender. That's who you'll get your money from. Maximum loans amount under EIDL are $2 million. You get a potential advance of $10,000 under EIDL, and you have a $10 million maximum underneath the PPP using that 2.5 multiplier that we talked about. Here's your application deadlines. The actual EIDL runs through the end of December. So if you're sitting here and saying, I'm actually doing okay, but what happens if things turn down for me in August? Well, you will have missed the time frame for a PPP, but you will still be able to take advantage of EIDL funds. So these are the deadlines you need to keep in mind as far as applying for these various programs. Eligible borrowers, generally speaking, we're talking about any small business, including sole proprietorships, independent contractors that meet the SBA size standards. There's this one exception here, which is this, when I said this NAICS code that I mentioned earlier, that 72 is what you're going to find restaurants and hotels, that's going to be their code. And it's basically to get down to that. If you have locations with fewer than 500 employees, you may exceed this 500 employee in aggregate, but you can still apply. Use of proceeds, and this is important to know. Again, payroll across all of them, in keeping with that theme of all of these loan programs. Rent, utilities, those things that are working capital, you would normally think of as working capital, and your monthly recurring expenses. There are a little bit more restrictions on the PPP. Again, debt has to be in place before February 15th. So you can't run out and take a loan out right now and then pay the interest off of it under this program. This had to be an existing debt, not something that happened after this crisis started. One of the nice features of the EIDL program is that there is no collateral for a loan of up to $25,000. So no collateral at all. So if you're a small business and you just say $25,000 will get me to the other side of this thing, and I'm convinced of it, you can get a no collateral, no personal guarantee loan from the EIDL program, and you might be able to avail yourself of that emergency award as well. And under the PPP, collateral and personal guarantees are waived entirely on the loan. So again, they're taking the the burden of repayment and collateralization and personal guarantees away from a borrower, and SBA is actually assuming, and federal government is assuming that on your behalf. This affiliation requirement still is in place. That has to do with making certain that you're not affiliated with a much bigger organization out there, and while you look like you're a small company, you're really part of a bigger company. It's waived on the grant side, but it is applicable on each of these loans. That is still in place. The no credit elsewhere is waived across the board. The forgivability, there is no forgiveness on EIDL, and again, the EIDL grant or the EIDL award is forgiven because it's no repayment. And then there is this formula for calculating your forgiveness calculations for the PPP. We went through that earlier. Interest rates do vary across this. The EIDL load is 3.75. That's been established from the very beginning. The statute allowed PPP up to 4%, but they have established it at, I'm sorry, this is actually we got to update this one. It's actually fixed at 1%. I believe the document that you download will have this at 1%. My apologies for that. Again, let me just reiterate, this is 1% now, not a 0.5%. The term is up to 30 years for an EIDL, and up to 10 years. They have already established that as 2. So the important things to really see here is it's 2%, and then pretend that this says 1. This is 1%. It's currently fixed at 1%. That is the PPP. That program rate and term is established. Every bank that you go to, regardless of who the lender is going to offer you those terms. That is the PPP program. One stipulation, we keep hearing, can I apply for an EIDL? If you follow that, look at that asterisk at the bottom. You can apply for both the EIDL and the PPP program. However, you cannot use those funds for the same item in the same period. Now, I don't know why you would do that. You just can't. So essentially, these two loans can be run in series next to each other, but not in parallel. You can't run them, you're not stack them on top of each other and double dip off of one of the loans. So you would pay for items covered under your PPP in that 8-week pay period. And then if you did have an EIDL loan, you might be able to use some of those funds to pay after you've extinguished the PPP program. There is also an option to roll the EIDL. If you got an EIDL ahead of time, before you're qualified for a PPP, you can actually refinance that into a PPP program. So you could take that EIDL loan, let's say you got a $50,000 EIDL loan, and the PPP came in and you said, oh, you're qualified for $500,000. You can take that 500, add the 50 in, and you can increase your loan limit under the PPP, refinance that EIDL loan if you'd like to do that. When you get to that point, we've got clients right now, we're telling, apply for both of these options. If you qualify for them, apply for both of them. Get the most flexibility, the most options you've got available for your business. Take advantage of these programs. And then once you take a look at them, if you want, we as consultants can help you work through the impacts to your cash flow of, 3.75 over, let's say 20 or 30 years versus 0.5 point over 2 years. We can help you do the cash flow projections and just make certain that you understand which of the loans is going to be the most beneficial to you. So with that, we've kind of recapped everything through the matrix. We'd like to open that up. I think there's been some stuff maybe coming in the chat room, and see if you've got any questions and see what we can do about answer them.
Hey, Glenn, good afternoon, and thank you for that. We do have a few questions, and we'll try to run through as many of them as possible. Just a reminder, if you do have questions, please submit them through the chat room, and we'll try to, again, answer them as completely as possible. For those questions that we do not get a chance to answer, we will answer all of them on our website. So Glenn, let's dive right in. A question about credit. If you had a bankruptcy within, say, the last 6 years, how would that affect your possibility of being approved for either the EIDL loan or the PPP loan?
Well, I don't know about the PPP loan because that's going to be the discussion you need to have with your bank about that when they're looking at the credit risk associated with that. For the EIDL loan, it will be a factor. I mean, it will have a factor. It will have an effect on your credit score, definitely. Now, do not despair. Do not apply. I know I just used a double negative, which you're not supposed to do, but I had that specific example with a client of mine. I asked the question of the SBA, and they said, follow what I'm saying. My mantra is apply, apply, apply. They're going to try to do everything they can to qualify businesses for some of these disaster loans. The idea is to help businesses survive, and so they'll take extenuating circumstances into consideration. Now, what might happen is after you apply, they may come back and ask you for some additional information, maybe an explanation of why you went into BK13 or whatever it is that that's impacting you. So be prepared for that. You may get may have to follow up with some additional question or answers, but don't disqualify yourself. If you're not going to be given an EIDL grant or an advance or a loan, let the SBA determine that. Don't determine that yourself, because they are trying to make these deals, they're trying to make these loans work for as many businesses as they possibly can.
Okay, thank you. Second question. You talked a bit about independent contractors. Could you expound a bit more on, one, whether they're allowed to apply both for the EIDL loan as well as the PPP loan? And with the PPP, how do you account for payroll expenses if you're an independent contractor?
Well, payroll expenses are going to be what people that you are hiring and paying as an employee. The payroll expenses do not include your 1099 costs, because people who you are paying as a 1099 are independent contractors. And so to answer that first question, after I've answered the second one, is independent contractors themselves can go and apply for relief under these two loan programs. So the idea is you as a business aren't really employing them, you're contracting them. They can go out and get their own relief because you're maybe not contracting them at this point in time. They can get their own relief under these programs, and they're trying to avoid that double dipping that might have occurred if you were applying because somebody was a contractor and then they go out and get their own loan. So that's what they're trying to do, basically. A sole proprietor or an independent contractor can apply. They can apply for EIDL right now, and you can apply for PPP funds starting on April 10th, this Friday.
If you applied for an EIDL loan and you were denied, can you reapply?
If you were denied under the first tranche where you put a lot of the forms in, you might try again on that second, on the streamlined process. But I would, because they've now gone to credit score evaluation, I'd have to say you probably, in reality, your success would go down. But I would try until they kept telling me no. I mean, you just never know what could be the new criteria underneath this revised credit check. Maybe you'd qualify under this new version. If you applied like starting last Monday underneath that program and got denied across the board, you're probably denied. You're probably denied. I mean, the reality is they're going to apply that same algorithm. Now, I would keep my eyes and ears open and see if there's any modifications to the plans. They might modify some things down the road, in which case you might be able to go back and reapply at that time. But I think absent any modification, a denial is probably pretty much final.
So sticking with the EIDL loan program, do you know how they calculate the maximum amount of either the loan amount or the advance for the EIDL loan?
I do not. We've all heard we've all heard rumors and suggestions on what that calculation is. I'm sure there is one in there. We just don't know what it is. But there's going to be something where they'll look, first at your credit score. And if you look at the information that they're asking for in the EIDL loan, they're looking for what were your receipts, what was your cost of goods sold, what was your profit. You can see that they're looking, and then I think they're looking for your payroll expenses as well. They're trying to assess your need, and from that, there'll be a factor that they'll offer you. They'll come back and offer you a loan. Now, again, if you come back, let's say your expectation, because you can't request a face amount for an EIDL loan. You'll put your calculation in, and it'll come back and tell you what you're eligible for. So think of this as like those links you get that said, why don't you fill this out and we'll tell you how big of a car auto loan will make you. That's essentially what the equivalent of what they're doing. They're going to check your scores. They're going to check some information you provide, and they're going to go back and say, you now qualify for $25,000 or $10,000. Let's say it's $25,000 for an example. If you then you'll be having a conversation with a human being who will be your loan processor. In the course of that conversation with that human being, you have a chance to appeal to him to say that $25,000 is not enough. Here's why I need this. He may very well, or she may very well come back to you and say, I need this additional documentation. Please send it to me and I'll reconsider it. But there is an appeal, if you will, of the amount when you're at that point where you're negotiating the loan and then ask for more. The SBA told us going back and modifying an EIDL is painful. Getting it up front might appear to be painful or a little bit of pain, but it is not nearly as painful as modifying it. So ask for what you think you'll need and be conservative, and work with your loan processor that you're going to be assigned.
If I am a business owner that has two distinct businesses, am I able to apply for either the EIDL or the PPP loan for each business separately?
Boy, that's a good question. Yeah, I mean, if you're a separate organization, if you got a separate LLC that's not part of a holding company, it's two standalone LLCs, I would think you'd be able to apply because they're going to look at your EIN. I mean, I think that's your key, is if your employee identification number is different for those two businesses, it's going to be treated as two different businesses.
I've applied for the PPP loan and I'm thinking about applying for the EIDL loan, but I'm not quite sure if I need those funds or not. Could I apply for the loan and then decline the offer once it's made?
Apply. Yes. I'm just repeating the SBA mantra. And yes, definitely apply. You can turn it down. You do not have to take the loan. You're not by applying, you're not committing to the loan. You're not paying any application fee. It costs you nothing. And this process is now streamlined. If you've applied for a PPP, you've got all the numbers you need to go apply for an EIDL. I would encourage you to go do it. You can always turn it down, or maybe even defer it and maybe say, I'm not going to take it down now. You could go back in, keep your loan number when you get it. If you decide 3 or 4 months down the road, I really needed that, then go back in and say, I'd like to reactivate this loan request. Can I reactivate it? And then they will do that. They will keep your information.
With the PPP loan, if I wanted to add staff, do I include that in the calculation with regards to the portion of the loan that will be forgiven?
Yes, if you get more, if you hire more people back, yeah, put that in your calculation. Now, you're not going to be able to gross that number up. You're not going to get a multiplier. You're not going to be able to recover more than the loan amount. So let's say you were at 5 employees, but for some reason, when you come out of this, you're one of those businesses that's going to actually grow and you end up hiring 10. That just means that you can get that forgiveness off your payroll multiplier. You're not going to get a multiple of that back. You're not going to get forgiven for more than it was loaned to you.
And lastly, we're getting close to our wrap-up time, but could you just reiterate the terms for both the EIDL loan as well as the PPP loan? We've had a few questions about the terms.
Sure. Yeah, real quick. Interest rate for an EIDL loan, 3.75. Term on an EIDL loan is up to 30 years. When you get your loan offer, it will tell you what the term is, the length of the loan. Under PPP, it is 1% interest for 2 years. Now, there's a deferment with each of them. EIDL is deferred for 12 months. Interest accrues during that 12 months on that 3.75% is going to accrue during that 12-month period. And then on the PPP, there's a 6-month deferral. You don't have to make any payments on a PPP in the first 6 months. The interest of 1% will accrue during that 6 months. That 1% accrual during the 6 months is a very, very small amount of money. That's a great feature with the PPP. Actually, the deferral on both of those is quite nice.
So with that, I'll turn it back over to you, Glenn, for all those who submitted questions. If we did not have a chance to answer them, again, we will answer all the questions on our website. Thank you.
Yeah, and this is where you go on the website. You can go to our general website, which is www.georgia, the state spelled out, sbdc.org. We're .org. If you follow this link here, this will take you to some of the documents that we went through today for your own download. I understand that connection is going to be put in the chat room, so you can copy that down and put that into your browser. We encourage you to do that. We also encourage you as you start to emerge from this crisis, and we will emerge from this crisis, and we will return back to that robust economy. I'm convinced of it that we had before. We are a resource for you to come and take advantage of. We provide, you've had a chance to hear me speak and my colleague Howard speak. We've got another 3 people in our office, and we've got other offices around the state. Come and talk to us. We're here to help you. We have great research tools. We have tools to be able to help you assess your financial status. We have the ability to help you put together a strategic plan going forward. Maybe you want to come out of this and look at a line extension. I've had some clients say that. I was thinking about doing this, and coming out of this thing, I think I want to go into this business. Come and talk to us. We can do some research for you. We can help you put the financials together. We can help you make that change. We're here to help Georgia businesses grow. And in the cases we're in right now, we're here to help Georgia businesses rebound and rebound quickly.
Thank you, Glenn, for an excellent overview of the SBA emergency programs. As Glenn said, apply, apply, apply. Time is of the essence. Glenn's contact information is available on the Gwinnett SBDC website. Also, there are summaries of these resources available on the website as well.
On behalf of Governor Kemp, the Department of Community Affairs, and the Georgia Department of Economic Development, we want to thank you all again for joining us today. It's important for us and our leadership to ensure that our small businesses are aware of these relief programs during this unprecedented time. Please feel free to lean on our team here or myself to assist you and your businesses in any way possible. Thank you again for your time today. Stay safe, stay in touch, and let us all know how we can help.